Hello and welcome to another daily dose of insights powered by Container xChange. My name is Christian, and every other day I bring to you the news and data points that move container markets. Doing a quick look back at Friday last week, we didn't cover it on Friday because we were too early. The three Taiwanese big carriers, Evergreen, Wan Hai, and Yang Ming, as well as OOCL, reported Q4 2022 as well as full year 2022 earnings, and even more interestingly, reported operating stats for January 2023. And what we've seen 2022, a very similar picture to what we've seen on the Maersk side. Revenues and profits on a full year basis still at record level, but in Q4 we saw the major slump, the major drop in line with global volume slumps and of course rate slumps. For January, we see quite a bleak picture in most of the lines, meaning that revenues are down on a month-to-month comparison to pre-pandemic levels, and that despite a significant increase in fixed assets in capacity, so a significant fleet size for most of the carriers. This also is very interesting to look at if you have ever wondered why liner profits are still relatively stable or sticky, despite a significant slump in spot rates. And the reason is twofold. One is, of course, still a major part of cargo is shipped on contract rates that are still relatively high and only reset once a year. And the second point is operating leverage, where revenues significantly outpaced cost growth over the pandemic. And hence, once you are over that fixed cost threshold, almost every dollar that comes in, as long as it's above variable cost, basically flows down to the bottom. And this operating leverage is great when rates are high and profitability is hence high. But of course, it also represents a challenge once rates drop below that threshold that lines need to sustain that significant fixed assets liability on their books, right? So once operating leverage turns negative, and this is what we expect for the remainder of this year, profits will turn negative and also will remain negative, as it's very difficult to climb out of that below fixed cost coverage volume. Looking at the remainder of this week, again, inflation data is coming in very interestingly on Tuesday. So tomorrow we see inflation data in the US, and on Wednesday, most likely in the UK. Both numbers are expected to be higher again on the back of a major labor market boost that we've seen. Numbers of in the labor market were very, very strong, significant job growth and low unemployment. So we expect to see significant uptake in inflation data. That's it for me for today. Have a very successful start into the week and see you all on Wednesday. Take care.